Hello, and welcome to the First Time Borrowers Counseling, your road to financial success. My name is Jennifer Hargrove. I'm a financial aid advisor here at San Juan College. And like you, I got my associate's degree from here, and I also borrowed student loans. So I know a little bit about what you're going through. This presentation is just to educate you about the federal student loans, how they work, your rights and responsibility as a borrower, as well as some tips about how to save some extra money. So we'll get started. Financial aid basically works like this. Every year you fill out your FAFSA. This generates a student aid report that gets sent to us here at the school if you put us down as a school to receive that. And then we award you based on your financial need. So there's four main types of financial aid. The first is the Pell Grant, as well as other state and federal grants. Work study, where you have a part-time job on campus. Scholarships, I highly recommend doing the foundation scholarship that application that's found on our website. It's a pretty simple application. And then there's also tribal scholarships as well as national scholarships that you can apply for. And the last type is student loans. So the big difference between all these different types of financial aid and the student loans is that you have to pay them back after you graduate. And remember this, you must be enrolled at least 6 credit hours or part-time in an eligible degree or certificate program here to receive any type of student loan. And you can always go onto our financial aid website and find more information about financial aid policy, loans, and also all of our forms. So with the federal student loans, the Federal Direct Stafford Loan Program, there's two different types. There's the subsidized and unsubsidized loans. And we'll talk about those next and the differences. So here's kind of some different ways that they work. You borrow the loan from the Department of Education and it's assigned a servicer. So your loan servicer is the company that manages all your loan and repayment of the loan. The loan amounts depend on the cost of attendance or basically your budget that we can award you financial aid, as well as any additional financial aid you receive. So if you receive a full Pell Grant, you get a really nice scholarship, that may make up most of your cost of attendance for the year or semester. So you might not be able to borrow as much in a student loan. And you can always ask us questions if you ever find that's the case. Um, and this is a big thing to remember with the federal student loans is that all loans are given in two equal disbursements. So if you apply for a fall and spring loan, you'll get half the loan in fall, half the loan in spring. If you apply for a one semester loan or a fall only, spring only, or summer loan, you get half of the amount on the initial disbursement date and the remaining half about 30 days later. So just something to keep in mind in case you need to budget better for the semester. And then also as a first-time borrower, if you've never taken out a student loan before, you do have a 30-day wait period from the start of the semester. So your disbursement may be delayed beyond our published disbursement date for the semester. And this is only a one-time thing. And then after you graduate or you leave school, or if you dropped below 6 credit hours, your loans do go into repayment. If you're ever curious about how much it costs to attend a school here at San Juan College, we do have a net price calculator on our website. So the first type of loan is the Federal Direct Subsidized Loan. It is a loan based on financial needs. So whatever comes off of your FAFSA determines if you're more eligible for this loan. It is borrowed from the U.S. Department of Education. It does have a fixed interest rate. You can go on to studentloans.gov to see the current interest rates. Interest does not accrue until you graduate or you leave school. So that's the nice benefit of this loan is that you don't have to worry about accruing interest while you're in school. And you also do not accrue interest while you go into a one-time 6-month grace period after you graduate or if you dropped below 6 credit hours. And then there is also a disbursement fee that gets charged to you when the loan is dispersed to you. So if you're ever wondering why, you got a little bit less than what you maybe asked for in a loan, it's because the government takes out that disbursement fee. So something else to keep in mind with the subsidized student loans is that there is a subsidized usage limit. So this affects new borrowers after 2013, or if you borrowed in the previous federal loan program called the FFEL program, and you paid off those student loans. So you're considered a new borrower again. You can only receive subsidized loans for 150% of your program length. So at a 2-year school here at San Juan College, that works out to about 3 years. So if you're asking, it's kind of an amount and also a time thing. So if you're asking for those full amounts for the full year, um, you're going to use up more of your usage limit. And this is important because if you do reach that 3-year limit, um, you would lose the maximum eligibility. You'll lose the interest subsidy on your subsidized loans. So you would lose the benefit of not accruing interest while you're in school, and they turn into unsubsidized loans. And we'll talk about the unsubsidized loans. So they are not a needs-based loan. So you may need to take out more of unsubsidized loans just depending on what comes from your FAFSA and your financial need. Like the subsidized, they are borrowed from the U.S. Department of Education. They'll have the same fixed interest rate. However, the big difference here is that interest accrues during all periods. So it will accrue while you're in school, and also during that one-time 6-month grace period, you'll accrue interest as well. And then the interest will get capitalized and added onto your loan. And it does have that same disbursement fee that's taken out. So we just want you to think before you sign. You must repay your student loans. Whatever you borrow, you have to pay back in full plus the interest. You do not have to take the maximum amounts. You can put down on the loan application an amount that will work for you. So maybe you need just a little bit of extra money to buy a laptop, some extra books. That's totally up to you. However, you do take responsibility for the amount, the payment, as well as the terms of the loan. You cannot exceed your annual or lifetime borrowing limit. So your annual limit for the year, which will cover fall, spring, and summer, is found on the middle of our application. And then your lifetime borrowing limit is for an independent undergraduate student, so that's somebody who is pursuing a bachelor's or an associate's degree, is $57,500. We cannot go over that limit. And then you also are limited on the total amount of subsidized loans you can borrow. So you can't go past $23,000 in subsidized loans. This is definitely important to keep in mind if maybe you're going on to a more expensive 4-year school. You want to keep your borrowing low here so then you're more able to borrow there if you need it. And student loans are also rarely forgiven in bankruptcy. Only a small amount are included in people's bankruptcies. A lot of times they are not forgiven with a lot of other debt in a bankruptcy settlement. And loans can affect your credit and your ability to borrow in the future. So on the flip side, they can help your credit if you're making payments that shows credit history, and it can improve your credit score. So it's always important to make those payments on time. And then one tip I highly recommend to students is just keep track of all your loan documents, whatever you get in the mail from the servicers, Department of Ed, keep it in a safe place. But also, maybe make an account on that servicer's website now so you can see the amounts. And you're not going to get surprised when you graduate. That's one thing I wish I would have done is kept track of how much I borrowed. So then that way I wasn't, totally blindsided after I finished school. So this is my loan pop quiz. So we'll see if we can test your knowledge here. If you drop out of school, you do not need to pay back your student loans. Is that true or false? That's false. So you could have borrowed a lot of money and not finish your degree. Department of Ed doesn't care. They'll still want you to pay that back. So it's always important to finish what you start. Student loans have interest and fees you have to pay. True or false? That is, talked a little bit of the interest that gets accrued on the loans, as well as that disbursement fee that gets taken out. You do not need to tell your loan servicer that you can't make payments. You just ignore them and they'll go away. True or false? That is false. They will go to great lengths to contact you about repayment. So it's always important. Keep in contact with them. Let them know when your situation changes, and they'll be more than willing to work with you. So when you graduate, which I hope you all do, your loans will go into repayment, and these are some options for the federal student loans. The first repayment plan is the standard repayment plan. This is where the payments are fixed or they're the same month to month. The term of repayment is 10 years that you'll have to pay back. It's also the default program that your loans will automatically go into, and it's good for people who want to pay less interest. The next type is the graduated and extended graduated plans. This is where the payments are lower and then they gradually increase over time. So the term can be 10 years for the graduated, up to 30 years for that extended graduated plan. It's good for people who want to pay less at first, but then maybe later on in their career, they're making more money, they're more able to afford the higher payment. And that extended graduated plan does have more interest that gets charged. The extended payment plan, the term just gets lengthened out to 25 years. It's a fixed monthly payment. It's good for people who maybe want a lower payment, but you will accrue more interest because the term gets lengthened out. And the last type of plans are the income driven. So there's the pay as you earn, the pay as you earn revised, the income based, and the income contingent plans. Not super important to know which one you'll qualify for. You fill out the paperwork, it gets sent to your servicer, and they decide which plan you qualify for. The terms can be anywhere from 20 to 25 years. Your payment gets adjusted according to your income and your household size. And then you have to renew this paperwork every year to keep it going. These are a great option if you are ever having trouble making payments. Please seek one of these out. You could get your payment lowered to something that might be very manageable. So these are some other programs that exist for you while you're in repayment. There's the forbearance, and that is where your loan payments are suspended or reduced due to financial hardships. So during the forbearance, you won't have to make payments, but you'll continue to accrue interest on the loans. Then there's deferment. This is postponement of payment allowed under certain conditions. So one example of this is while you're going to school at least part-time or 6 credit hours, you're not having to make payments on your student loans. The interest will accrue on the unsubsidized loans, but they will not on the subsidized loans. And then the thing we want to avoid is default, and that's failure to repay a loan. Your loan will go into default if you haven't made a payment in more than 270 days for the federal loans. Private loans are different. We don't want that to happen because your wages or your tax return can be garnished, your credit rating gets damaged, and your lender can also take you to court and sue you. So it's super important to contact your loan servicer anytime you have trouble making payments, your phone number, address changes, or you decide to change schools. And you can always go to studentloans.gov, has a very detailed write-ups on the repayment plans, as well as more information on the federal student loans. So this is just kind of an example of how much interest you might have to pay on a student loan. And these are just real rough estimates to give you an idea. So we're going to take a student. His name is Fred Flintstone. He borrowed $31,500 while as a student here. And this was the maximum amount that he could borrow as a student. So Fred's monthly payment now that he's graduated is $335, and he's in the standard repayment plan. So he's got to pay $335 for 10 years. The total amount that he paid for the initial amount that he borrowed, plus the interest that accrued and capitalized on the loan, was $40,186. So that was an additional $8,686 in just interest that was added on. So we'll talk about Wilma Flintstone next here, just to kind of illustrate how the amount that you borrow can affect your payment. She only borrowed $12,000 for the time that she was in school. And she only borrowed what she really thought that she needed. So she took into consideration, she maybe had a budget and knew what she needed to do. So now Wilma's monthly payment, now that she's graduated, is $127 per month for 10 years. So the total amount that Wilma is going to pay is $15,310. So she had about $3,310 in additional interest that was added on to her principal, or the initial amount that she borrowed. So this kind of will give you an idea of how, borrowing more is more that you have to pay month to month, but also more that you pay in interest. We just want you to be a smart borrower. And the big thing here is just borrow what is necessary. Don't overestimate your financial need. Don't use your financial aid for things not related to your education. Don't use your financial aid to buy, really expensive things that you normally couldn't afford, go on a trip. Only use it for like living expenses, transportation, things that are really related to you going to school. Always start first with your free aid. See if you qualify for any grants or scholarships. Also consider maybe doing work study if you're here around campus. If not, maybe think about picking up a part-time job if you're a full-time student. Talk to your employer about a tuition assistance program. Some bigger companies do have programs where they will pay your tuition while you're in school. And think about your overall career and life goals. Know what kind of job you'll have after graduation with the degree you're getting. Also know how much money you're going to be making. Maybe you might need to move to a different area. Think about these things now, so then that way you have a good plan when you do graduate. And also think about if you're continuing your education. And know your interest rate, terms, fees, and monthly payment now. This is all good, so it's not a surprise and hits you after you do graduate. And we want you to be a smart student. And these are just some tips to help you start saving now. Try to buy your textbooks used or rent them if you can. Always look online, compare with our bookstore, just kind of do some browsing around. Budget your monthly expenses now. I cannot stress that enough. Even if you write it down on a piece of paper or use an app like Mint that'll automatically sync with your bank account, and you can kind of categorize your spending. May even start small. Maybe just track the amount of money you spend on groceries, shopping. You can just start with little things and gradually start budgeting more. Don't overwhelm yourself with a budget. Try to pay on your loans while you're in school. You can pay on the interest that's accruing on the unsubsidized loans. You can pay a little bit each month. You can totally pay them off. There's no penalty on early payoff of the federal loans. And just be successful in your classes. This is a big thing. If you don't pass classes, if you withdraw from a lot of classes, you can go on financial aid suspension. You can also go on academic suspension as well. So it's just important to finish what you start. and try to build an emergency savings account. Even just $10, $15 a month can help you out if, car breaks down, washing machine breaks. Just have a little bit of money saved up for those emergency situations. And keep your credit card debt low. These things can spiral quickly out of control. Credit cards typically have really high interest rates. So if you're not paying off that monthly balance, you can start getting a lot of interest that's charged. If you do have to put something on a credit card, just try to pay off that monthly balance. And be frugal now because it will definitely pay off later. Try to live as a student. And these are just some mistakes and things you can kind of look out for. So I advise a lot of caution to people that use title loans, fast cash loans, or rent-to-loan companies. These companies usually charge an insane amount of interest for, loans or furniture. It's just better to, try to save money up to buy a big purchase rather than paying like 3 times what this would have cost you to buy it outright. And sometimes a lot of these title loans, fast cash companies don't even exist in other states because they're illegal. So just use a lot of caution and really read those interest rates. And just not budgeting or tracking your expenses or trying to save. Living month to month can be really difficult if something unexpected happens. And ignoring your credit score. If you're not checking your credit report, and you don't see if maybe, somebody opened an account that you don't know about, or, maybe there's something you forgot to pay. It's a good idea just to check this every now and then, just to make sure there's no discrepancies and you have a good idea of what actually your credit score is and how you can improve that. And really be careful about identity theft. This is a huge issue as more and more things go online, digital. You never know who can, if a company has a data breach, who could have your information and sell it to somebody. So it's important to look at your credit report, check your bank accounts. Just make sure there's, nothing out there that could hurt you later. And then another big thing is ignoring or making late payments. When you're having to pay late fees, that's a lot of extra money for just not paying on time. Usually a lot of times if you talk to, your utility company, a business, you can get a grace period. So always, just try that first instead of just waiting to make a late payment. And another thing to look out for if you have a student loan is that there's a lot of student loan scams that exist. These third-party businesses will offer to help you with like consolidation, lowering an interest rate. Sometimes they'll say they're from an attorney's office. You only really should deal with your loan servicer or the Department of Ed or the school you got the loan from about your student loan. It should never be any sort of third-party company that's trying to make money, trying to charge you. If you ever get anything in the mail, just kind of question it. If it doesn't seem legitimate, um, Google it, go to a Consumer Protection Agency if you're not too sure. So if you're ready for a loan, you'll want to make sure you complete this checklist and do all the steps on it. You'll want to make sure you submit the loan application, and you can find a copy of that on our website. Also, make sure we're not missing any information here at the financial aid office. Do your first time borrowers counseling. Do the federal entrance counseling. This is found on the studentloans.gov website. You want to do the federal direct loan counseling for undergraduates. It's something that is required for a federal student loan. You want to complete your MPN. This is found again on the studentloans.gov website. It's just something that you sign, put a few references down. You'll want to make sure you do have this sent to us here at San Juan College as a school to notify. So make sure you check that when you're filling it out. And also these are for the direct Stafford unsubsidized, subsidized undergraduate loans. And then enroll and maintain at least part-time or 6 credit hour status. So you're one step ahead of the game. You've done the first-time borrowers counseling. And you can always go onto your San Juan College portal to view your awards, check your financial aid and also your billing account, and also see your next steps. So you're on the road to success. If you ever have questions about student loans or your financial aid, you can always email me here at the hargroveJ@sanjuancollege.edu email address, or you can give me a call. I'm always more than willing to help you out with student loans, but also if you graduate and you're not sure who to make repayment to, I can help you with that. So I want to thank you for joining me today.